Good morning, this is Larry Edelson with my Uncommon Wisdom video market update for Monday, October 17th. I'm currently on the road, so I'm recording this video update on my laptop. The clarity and the sound may not be as good as I would like it to be. Just bear in mind that, again, I'm on the road and I am doing this on my laptop. I want to go right to the markets. We're seeing pretty much largely what I expected, a bit of a bounce, although the bounce in all the markets has been greater than I expected. We're continuing to see volatility, a lot of it surrounding the news that leaks out from hour to hour, day to day on Europe's sovereign debt crisis. And keep in mind that Europe's sovereign debt crisis is not going to be fixed by the politicians in Europe. First of all, they don't have a clue what they're doing. Compared to the U.S. political process, I see the European leaders as totally inept. And although they're trying to patch together a rescue package for the banks there and for the economy and for the euro currency, all they're doing at best is kicking the can down the road in a very, very meager fashion. I do fully expect that Greece will have no choice but ultimately to withdraw from the Union and default on its debts, and we may see the same thing happen down the road with Italy and possibly even Spain. The crisis in Europe is far worse than what we saw in the 2008-2009 meltdown in the United States, which was the spark that basically started the entire global financial crisis. However, when the European sovereign debt crisis fully migrates to the United States, that's when we'll see the mother of all crises. Right now, the markets are being buffeted back and forth, as I said, by the news in Europe, that's news and rumors and innuendos coming out of Europe. But overall, the intermediate term trends remain intact, and that is lower for most commodities and the stock markets. So we're caught betwixt and between, with some short-term relief from bad news, if you will, intermediate-term trends remaining down, and long-term trends remaining very, very bullish. I want to go, therefore, right to the gold chart. This is the gold chart that I've had up on the screen now for quite some time. You'll see that gold did test right up to the 1692, $1,700 level on its reaction off the 1535 level. It is now turning back down. As long as we remain below this resistance line, then gold is definitely indeed set for another leg lower. I do fully expect to see at least 1535, probably the 1482 level, and probably the 1432 level. We'll take each level as it comes. There will be some bounces along the way, but I do not believe the correction in gold is over or will be over until we test at least the 1432 support level. So I remain short-term bearish, intermediate-term bearish on gold, and long-term bullish on gold. Let's now go to silver. Silver had what some seem to think a pretty sharp rally off the $26 level up to about 32, and that is indeed a $6 rally. But if you look at this chart, it's really an inconsequential rally. Silver was unable to get back above the $34 level, this dashed line right here. So that, to me at least, tells me that silver is indeed very, very weak. I believe silver is now preparing for another leg down that will take out the $26 low. There's some support at $25. However, I believe that will give way. The major support lies further down at the 23 level. That's system support on my models. It is not technical support. It's system support from an algorithm I developed. And I do fully expect to see that we will see $23 in the weeks and months ahead in silver before the end of the year. Not a long drawn-out process, but another sharp spike lower once we get below this $29 level. Will probably begin to accelerate down to the $23 level. If silver holds $23, I will then declare a long-term buy in silver, because by 2015, 2016, at the latest, I would then expect to see silver over $100 an ounce. Now, I want to go to the dollar index. The dollar index had quite a rally up to just above the 80 level, where I did indicate to you that it would find some resistance. We have since sold back off. The dollar should, basis the dollar index, find some support in the 76 to 77 level and begin another attempt at the highs up to around 81 or so. If we get through that, we will most likely get above that up to about the 83 level. That is completely in sync with another leg down in commodities and another leg down in stocks. So let's go right now to the Dow Industrials. Dow Industrials had a violent rally back up off the 10,404 low, which came incredibly close to the 10,354, 10,384 level that I've been warning you about is critical for the Dow. Once that level gives way, and I do expect it to give way on the next leg down, we will see the Dow plunge to 9,034, possibly even lower. Too early to say for sure, but I do believe we are beginning the next leg down now. And you should all be aware of that, no matter how strong some of these short covering rallies appear in the markets. The trend on the intermediate term is decisively down, and don't get caught in any of these short-term bounces that occur in the markets. The downside is not resolved yet. And I also want to make it perfectly clear, though, I am short-term and intermediate-term bearish on almost all markets, with the exception of the dollar. I am long-term bullish on all markets. What's happening now is a normal cyclical, technical, healthy pullback that's going to shake out a lot of longs and a lot of weak longs and prepare these markets for their next leg up, which is going to be eerily similar to what we saw between 1932 and 1937 in the Dow Industrials, when European economies truly defaulted. The Dow and commodities went through the roof, even while the U.S. economy sank further into a depression. I see a very, very similar outcome over the next few years with these markets that we have today. So please stay tuned to all my writings. I do have my October Real Wealth Report issue publishing on the 21st. I give you some important year-end guides to look at in the markets and some forecasts for the early part of this year and the months leading up into the year-end closings. You'll want to see that issue. Till my next video, this is Larry. Have a good day and a good trading week.